All right, so guys, we are now recording this Zoom conversation, and we're going to be posting this so that our clients, our customers, and our community can hear what we are discussing today. We are doing a follow-up conversation. Last week on Saturday, the stimulus bill had just been signed into law on Friday evening. And we did a high-level, deep dig into the stimulus bill and talked about that. And so now here we are 7 days from that, and we're talking about, what have we learned since then and what's going on in our respective industries. So I'm a realtor. We have a mortgage, certified mortgage planner, loan officer on deck. We have a CPA on deck. And we have a bank branch president on deck as well. And so we'll do introductions. So I'm Dan Forbes, Forbes Property Group with Pure Realty in Cedar Park, Texas, adjacent to Austin, Texas. Danny, introduce yourself.
I'm Danny Smith. I'm a mortgage loan officer, a certified mortgage planner, and been in the mortgage business for 36 years and seen a lot of stuff, and we're seeing some new stuff.
All right, thank you. Tom.
Tom Bargsley, CPA here in the Austin Metro. Work with business owners, professionals to guide them through cash flow and financial situations. I'm a virtual CFO.
All right, Jeff.
Good morning. I'm Jeff Baker with Citizens National Bank. We're a 120-year-old community bank serving the commercial needs of the Austin area.
Great. Thank you very much. All right. So I'm going to speak first, and then we'll go to our loan officer, our CPA, and then our bank guy. So what's going on in the Austin residential market, or the whole Austin real estate market right now, because of the coronavirus and the economic upheaval that we see ourselves going through right now. Now, I'm a student of the market. I've been a licensed agent since the mid-90s, always been a student of the market, but even more so right now, been watching what's going on weekly. Let me just hit a couple things. I want to share my screen so folks can see this, and just a real high-level overview. So let me go to my screen here and just share a couple of things. So one thing, I'm tracking on a spreadsheet, what's happening in our market right now weekly. So this number right here, there were 726 new residential listings that went on the market last week. It dropped down from 2 weeks ago, which would have been March the 21st. So I'm talking about today's numbers, April the 4th, the last 7 days. We've had less new listings go on the market, but the residential market is still moving. We had 638 homes that went under contract this week. So buyers are out there. They are buying listings, and I'm using a special COVID-19 strategy when property is being shown to reduce practically to zero any risk of infection. And then there were 743 closings last week, which is actually an increase over 2 weeks ago. But here's an important number. Those are all important, but this one is amazing. The days on market, how long did it take the sellers to get the home under contract? 26 days. And 2 weeks ago, it was taking twice as long to do that. And those 743 sales, the average sale price percentage compared to list price was over 100%. So sellers, those sellers on average got more than their asking price. The second number or chart that I'd like to share with you is this one from Austin Title, and this is a 5-year tracking of residential closed units, and the red is this year's, and last year's was the green number. We had more listings closed last year at this time. The dark line is the 2019 number. So where do we go? Where do we go from here? Well, notice some years the sales actually dropped down. 2019 sales actually went up, and we were, setting record. We were on record-breaking sales numbers for many months. remains yet to be seen. I mean, we're expecting to see some changes in our real estate market here over the next few weeks, guys. And because people are getting laid off, people are losing their jobs, people are sheltering in place. And I just want to ask you guys here in the room, anybody have a question about anything that I shared? Or a comment?
Dan, I thought it was very interesting that your inventory is still maintaining, and although you're down, I mean, you've got people clearly closing deals to substantial numbers. So I think we have people that are concerned, but we also have active buyers that are out there paying 100% of the listing price, which is amazing.
Absolutely. I think Danny can maybe speak to what's going on with the mortgage rates, because I think that's important. Danny, what's going on in your world?
In relationship to your graphs there and your numbers, I think back to February, and February looked like it started flattening the curve there a little, the curve, but rates were getting a whole lot better as February built up. As we come into March, rates did spike up in mid-March back to actually last November numbers, but percentages, but they're coming back down. They've been up and down. We've had so much volatility in the stock market and the mortgage-backed security market. But it is continuing to stabilize. We didn't have near the volatility this week as we've had in the weeks past. So that was good to see that. As to the mortgage market and as it pertains to the stimulus package and kind of what we're talking about here today, the big thing is forbearance. People not making their payments, and what does that mean? I'll say first, if somebody can make their payment, they need to make their payments. Forbearance does not mean forgiven. It does not mean deferred. It means forbearance. You don't have to make your payments right now. There is a possibility that when the forbearance period is over, and if you have a government-backed loan, FHA, VA, USDA, Fannie Mae, Freddie Mac, the conventional loan, you can get forbearance up to, let's start off with it 6 months, 180 days, and then a renewal for another 6 months. But it's not known what happens at the end of that time. There's you're either going to have to, either the interest is going to be put onto the end of your loan, and you have to then you'll then be making interest, paying interest on that interest. That is a possibility that is pushed out to the end of your loan. There's also the very good possibility that you will have to get caught up on your payments at the end of that. And that's not good. People coming out of this, the person that doesn't have the payment to make it monthly is not going to have it at the end. So therefore the lender will make you a loan that you have to make a separate loan payment to the end. So the best thing is, if you can make your payment, make your payment. If you can't make your payment, then request for forbearance. The other side of this is, if you have an escrow account with your lender, that escrow account, every month you're putting into for taxes and insurance, so that when your insurance is due, when the taxes are due, the lender makes that payment for you. Your escrow account isn't going to build during this time, so you're going to have an escrow shortage, and that escrow shortage is going to have to be, by law, you're going to have to get caught up on your escrow shortage, either one-time payment or the lender's going to collect it monthly. So it's going to cause some hardship at this time, and I'm not trying to be a downer about this, but What I'm really saying is if people can make their payments, it's best to make their payments. The forbearance is for people the stimulus package in this part, it's to help people make their payments that have been negatively affected and can't make their payments.
All right, good.
Any questions on that?
Might they, if they offer forbearance, might that just be on principal and interest? I'm wondering, or is normally it includes taxes and insurance, you know, in other forbearance situations?
That's a great question. You can, under the forbearance in the stimulus package, you can make partial payments. So making enough for your taxes and insurance to go into your escrow account. The key is there, the lender, you've got to communicate with the lender what you want to happen to that. So actually, as I said it, it's probably 6 of one, half a dozen of the other. It's going to go into an account because it's all going to build on it. And there's going to be a shortage, whether it's in your interest, principal and interest, properly amortize your loan, or for taxes and insurance. But yes, Dan, they can make a partial payment under the stimulus package. Hey, Dan, you're muted. Yeah.
So if you're insured with, you know, XYZ insurance company, if they don't get paid, they're going to cancel your insurance, and the lender would force place insurance on there, which would be a lot more expensive in the long run as well.
Yeah, yeah.
So,
That's if you have an escrow account, the lender's going to make that payment. Okay, the lender's not going to let that thing go. The lender's responsible for, in essence, for making that payment on your behalf, but then they need to collect it from you. And this is where this thing gets, you know, there's a lot of speculation going out 6 months, a year from now, 2 years from now, as everybody starts getting caught back up on this. At what point does this start affecting people's credit that can't get caught back up? That's why you can make your payment, make your payment.
okay. All right, let's move on. Tom Bargsley, Mr. CPA.
Thanks, Dan. I just want to reinforce to everyone, business or individual, that this process we're going through just really accentuates your need for planning around cash flow, everything we've talked about. So everyone's trying to make this work with their business changes. So look at cash flow. We still have those 3 pieces of the stimulus. One is the payout, the checks, $1,200 per person, $500 child. The timing at the date we've heard is first date is April 17th. Again, that's in the state of flux. The second is the economic injury disaster loan program through SBA that you can directly apply for. And the third is the payroll protection program. Some banks begin accepting those PPP loans applications yesterday. Have not. We'll hear from Jeff later about the state of flux on those rules. So what I would encourage you to do as a planning process is, if you have not filed your 2019 tax return, particularly if you've had a change of address, this would be an excellent time to do that. And particularly if you can provide direct deposit information, that would give the Treasury, IRS, a way to get your money to you fastest for the stimulus payments. That's very important. Because those amounts, if you qualify, are not taxable. So that is money to help support your cash flow. Secondly, the economic injury loan, disaster loan through SBA, there is an online link for that directly to SBA. But again, we do not know about the timing of those disbursements. So again, you know, cash flow planning is important. And the third is the payroll protection program. And again, you know, has a relatively short application, but again, we do not know when those funds will be dispersed. So, you know, look at your cash flow for your planning, consider the timing, and then third is get your support ready. At some point in time, particularly on the economic disaster and the PPP programs, those will require at some point in time documentation to support what you've done with those funds, and would help you to either mitigate the amount of interest you pay and or increase the amount of forgiveness of the PPP program. Those are really important factors. So if you're kind of a procrastinator, and I hear that, even though they've moved the tax return date to July 15th. This is not the time to procrastinate. If you have money you're owed, get it filed. If you owe, knowing sooner rather than later is better, and it allows you some time between now and the time the payment is due to work that into your overall cash flow planning. I think that's really, really critical at this stage. And just a third point, based on the bank, you may have a different reaction when you talk to your bank, and I'm going to leave that to Jeff, but I've got direct information from 3 markets, Chicago, Ohio, and Texas with my work, and 3 different stories about what's happening. So be patient and consider your banker a valuable source, and realize that this is kind of like making an airplane while still flying. We're kind of putting this together as we go.
That's a good one. Or sewing your parachute together after you've jumped out the door. Mr. Jeff Baker.
Hey, Tom, I do have a question. I'm sorry, Jeff. Tom, is for the forgiveness of this, isn't there a percentage, or how much of? I'm sorry. Go ahead. You know what I'm talking about.
Yeah, there's a path to get you a partial or complete forgiveness of the PPP program. Now, those rules are not cast in stone, but we have an idea of what that is. Like an example, let's say you start with 10 employees and 100,000 payroll. Ideally, at the end of this, you come out, if you could get all 10 people back at a similar pay, you could qualify potentially for a 100% forgiveness. Now, something less will get you a proration. We do not know exactly how SBA will come down with final rules, but that's our target. It's meant to help people in this short-term stretch of, say, 3 months. But whatever you do with that can give you an opportunity to give you cash flow, because even if you do not have the forgiveness, you may have an opportunity to get a certain amount of cash through this loan at an extremely low interest rate, right now 1%, that you do not have a payment for 6 months. It's a 2-year loan. For many businesses, that might be as valuable as a line of credit that they could not obtain, because this PPP program requires no collateral, no personal guarantee. So those are, we don't know the final rules, but that's the path we're trying to take.
And we may be stepping on Jeff's toes. So Jeff, on to you. What's going on in your world?
Well, I guess if I could speak to the audience today, what I would tell them is that Tom is quite right. The larger banks are taking a bit longer to roll out their participation in the Paycheck Protection Program. Smaller community banks that have chosen to be part of this program are accepting applications. I'd like to tell the audience that at this point in time, as of Saturday morning in my office, we still have not received SBA guarantee numbers from the Small Business Administration for the applications that we've received. The process is this, and I'll just keep this brief, but for our audience that doesn't understand this process, the Small Business Administration is not the one funding these loans. These loans are being funded by your community banks and your larger banks that are accepting the applications. However, before funding, SBA has to review the application, and SBA has to issue a number to that bank, which then in turn gives them the ability to fund the loan to the customer. The biggest misconception that the media and many trade organizations have been putting out some incorrect information as well, is that this is free money, and it's not. It could be forgiven if you meet all the guidelines. SBA came out Thursday evening about 5 o'clock with their interim final guidelines. I emphasize the word interim because these guidelines, though they are final, they are not really final. So banks are doing the best they can to wade through 31 pages of interim and very ambiguous language in some cases to address the needs of the borrower. Now, what we do know is this, based on the guidelines that we've seen, to harken back to what Tom has said, if you are looking to get as much of this loan forgiven as possible, kind of the benchmark that we're seeing in the guidelines is that at least 75% of the funds that you receive will be put back into force into payroll. If you exceed an amount of 25% for mortgage interest or utilities, a non-payroll expense, that may be a hurdle to getting that money completely forgiven. In the guidelines, it says that the forgiveness will be for the principal amount of the loan. In layman's terms, that means that you're still probably on the hook for the 1% interest that accrues on the loan after the 6-month payments forbearance. So, number one, be patient. This is a government program that was sprung upon banks with about 8 days. The SBA does not have the final rules in place, and they're not issuing numbers. If someone in the audience has a bank that has already made the loans with an SBA number, I'd love to hear that, because I've talked to bankers across the country. No one has been issued those numbers. So this is truly, as Tom mentioned, we're building the airplane as we're flying along. The other thing I would say is be patient about the funding. I know folks are very desperate. I'm getting calls. We've gotten hundreds of calls this week concerning this program. I'm telling folks, worst case scenario, expect funding to be 30 days. Hopefully it will be less, but with any government program, we're learning as we go, and the SBA is learning as they go. So just be patient. Reach out to your bank. If your bank is not participating in the program, you may be required or forced to apply for the disaster relief loans that are out there. Tom mentioned the EIDL loans. There's no presumption that a bank has to participate in this program. Our bank is a preferred SBA lender. We typically do not do the 7A and 504 loans, but we are participating in the PPP program because we feel it's vital to our small businesses and our customers. If you can't get that PPP loan through your bank, most banks are restricting the PPP loan to existing customers as of the 1st of April. So go to the SBA.gov website and look at your options for a disaster loan or perhaps a disaster grant. Those may be your only options. And Dan, I'll kick it back to you. If anyone has any questions, I'll be happy to answer those.
Okay. Any questions, Danny or Tom, of Jeff?
No. Very good, Jeff.
All right, so let's close again. Tell people who you are and how they can get in touch with you, because that's the purpose of this discussion today. Here's 4 experts in different fields that can be a resource for you. So we'll go back in reverse order. Jeff, again, who are you? Where do you work, and how can people best get in touch with you?
Thank you, Dan, and I appreciate the opportunity to be on with everyone this morning. I would like to say that each one of the gentlemen on this call are consummate professionals, and they're trusted advisors for me personally. I try to recommend my clients and prospects to these gentlemen at every opportunity I get. My name, at least when I woke up this morning, was Jeff Baker, and I'm with Citizens National Bank. I have a branch here in Cedar Park, Texas, in the North Austin area, and I can be reached on the web at cnbanktexas.com. We have a landing page there for our staff, and you can visit with any one of our staff. All of our contact information is on the web.
Thank you, Jeff. Tom.
Thanks to all. This is extremely helpful for me as a professional. Folks, you need some assistance with this. It's hard to do this alone. So reach out to these gentlemen. It's a great resource. Again, Tom Bargsley, CPA. I'm in the Austin metro area. You can simply look at bargsleycpa.com, and there's a ton of information that will help you from cash flow or contact information. Be happy to help. And if you have questions regarding your business and the PPP program from the financial side, I'll be happy to help you, guide you, and there is no cost for that service. Thank you.
Thank you, Tom. Danny?
I'm Danny Smith, Danny L. Smith, on the web, whether it's Facebook or LinkedIn. I have a web page, personal blog web page, got all my information on it. It's dannylsmith.com. Under LinkedIn, it's LinkedIn there. If you type in Danny L. Smith, I should be the first one to pop up. All my contact information will be there.
Great, great. Thank you, guys. Want to appreciate you being here on this call and being a resource. I'm Dan Forbes, Forbes Property Group with Pure Realty here in Cedar Park, Texas, serving the Austin, Central Texas area. A couple of ways I'd like to mention that you can reach me. One is at austinshortsalehelp.com. I think we're going to have a wave of foreclosures, a wave of short sales coming within months. And so you can go to that site and get in touch with me. The other is through YouTube. 5 days a week, I'm doing daily COVID-19 real estate updates for our area. You can go to YouTube, just in the search bar, type in Dan Forbes and look for Austin Real Estate Buzz. And hopefully you'll find some great information there. Thank you so much, gentlemen. Appreciate you being here today.